And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to all of you, my futures family. It's time for the Market Prep Tuesday, May the 23rd, where we always focus on seeking accurate context, good risk management, and remaining patient in our trading. My name is John Hoagland. Thank you for trusting me with your time. What do we have facing us today as far as trading is concerned? Well, we have Lori Logan speaking at 8 o'clock Central Time this morning, so we'll see what happens there. That's the only talking Fed that I see on the schedule for this morning. At 8:45, right in the middle of Make Hoag Money, we've got the PMI Composite Preliminary Release. That's both service and manufacturing PMI. This may be somewhat impactful as the market is just seeking anything to react to. 9 o'clock this morning Central Time, we have new home sales and Richmond Fed Manufacturing Index. So it seems investors are becoming a little aggravated by some of the rhetoric, which is as different as the viewpoints coming from both sides of the debt ceiling negotiations. Obviously, we have no deal yet. U.S. stock index futures are looking to open lower this morning, with the NASDAQ down almost 0.5%, leading the way to the downside, which has been something I've noted this morning, which is a little bit different than what we've been seeing. What else? Earnings this morning, actually. Some earnings. Lowe's came out beating expectations. AutoZone with mixed results. Dick's Sporting Goods beating on expectations. We also later have Intuit kind of rounding out the end of the earnings season. And the thing that just keeps popping into my head today about trading in general today, this week so far, is uncertainty. We don't know what's going to happen with this debt ceiling. We all, I'm sure, are confident that our leaders are going to get something on the books so that we don't default on our debts. What are we doing here? We know that we've got to get something done. Let's get it done. As far as the VIX this morning, it's a little bit higher, 1777. It was 1709 this time yesterday. The dollar index continues to leak higher at 103.50. It was 103.11 this time yesterday. And yields continue on the 10-year to leak to the upside, 3.75% this morning, 3.69% at this time yesterday. And at this time, I always ask that you make sure and hit the lucky like button, share, comment, question, feedback, heckling, and love. We're always welcome here on the Market Prep. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. We've got a kind of a retro group, coach's playbook for you today. Something from 2017. You're going to see us back then, and a little less gray in the beard and the hair and the head here. And it was just a kind of a question and answer session that we did back in 2017. That should be interesting to watch. And it is Make Hoag Money Day. Here's the link if you want to register and join us in the Zoom meeting. Of course, you'll be able to watch it on YouTube as well. That's right after the prep here this morning. Great session with group coaching yesterday. We do it again tomorrow at 12:30. I'll be putting the link in tomorrow morning on the prep so that you can join us and bring your questions. You can always email them in as well, jhoagland@topstep.com. Great session yesterday. So you got a little bit of news in your email yesterday. The daily loss limit is now a soft breach. It'll take you out for the day, but you don't have to reset. You'll be able to resume trading at 5 o'clock that afternoon or that evening or whatever it is for you. I think a great thing and a great boon for our traders. We're always seeking to improve. Keep your eye out for more improvements coming soon. Good morning to everybody. Shaw, good morning. First in the room, winning the prize. Brody, Steven, good to see you. Pete, Scott saw and he conquered. Rooster, how you doing? How's the little one? Will, good morning. George. Center of the universe is very lazy the last couple of days. She's been getting a lot more exercise being outside because it's so nice out. Brian, good morning. JD Royalty, good morning. Rusty Golfer, T-Bone, my brother, it's good to see you always. I love you and miss you. Alejandro, Caesar, good morning. Bill Phillips, George Duque, good morning. Andy Bleed, Henry G, Dan Trader, good morning. John Brunel, Kevin Laffey, good morning, sir. Chad, good to see you. Shy, Julian, Jason Lewis, Robert Harrison. Data, good morning. DA, good morning. Shaw. Yeah, I guess the CME group is discussing leaving Chicago. That's been dangled in times past whenever the mayor of Chicago would start threatening the CME group with transaction taxes. I think there's a little bit of a difference in why they're thinking about doing it now. Ponzi Zombie Killer, howdy. Sarah Hall, prayers and love to you as well. Nastic, Chad, Anissa, good morning, Tim. Confident in our leaders, yes, classic comedy right there. Yeah, confidence in our leaders, kind of an oxymoron, isn't it? Jason, good morning. Caesar, James, Jimmy, Phil, Trading Research, Casey, Grounds Hero, good morning. Got my coffee right here. Will R. Sell. Don't just stand there. Get back in there and sell. Mark, Casey Olson, Sup, Dowitzer, Alfred, good morning, everyone. All right, we are going to get into the charts pretty quickly here. I want to give as much time as we can to get into Make Hold Money before the open today. So let's jump in. All righty. Here's the daily in the S&Ps. So uncertainty, still the word of the week here so far. Range bound, and after an attempt to break out of two really zones of balance, this zone and this zone, trying to maintain price over that 4,200 big fat round number. Our open interest yesterday was rather inert. We lost 1,200 contracts in open interest. Volume was, of course, lower as investors kind of sit by the sidelines waiting for some news, something to happen, something to change. This is our third day in balance, or I'm calling it kind of in limbo. We're in limbo here. We don't know. We don't have information that we need to make good trading decisions as far as some of the macro things going on out there. So tick tock. Time goes by. Anything can happen. We know that. We talk about that a lot here on the Market Prep. Well, what are we looking at shorter time frame here? We've got some lines here. These wavy lines this is VWAP. This is first standard deviation, second standard deviation on both sides. I'm going to go ahead and take these off because I think that they just tend to complicate things here, and we're trying to keep these charts relatively simple. So here was yesterday. It was a normal trading day. We don't see those very often. It was even in the NASDAQ too. We'll see that on the TPO charts. Overnight inventory I'm viewing as short. The market is inside regular trading hours in large part. In the overnight session, we did peak out a little bit above. Anissa, we never did take out that recent high in regular trading hours, so that's going to, in extended trading hours, I should say, so that's going to hang out there. Open overnight inventory, I should say, is short. We're still inside yesterday's range. below value. Yesterday was an inside day in large part from the day before. Value shrunk and is inside the previous day. So obviously you can see that this market is coiling and just awaiting new information. And again, anything can happen. You know, we're kind of setting up a third day potentially in range here in balance. Our overnight low looks to be something that I'll be keeping a pretty close eye on here in Make-Hogue Money. Take a look at the TPO chart. Just not a lot of confidence in anything that's going on here. So yesterday, we repaired Friday's session. It was a normal trading day, which means the initial balance was never extended on either side. So the market, it established its range and then just rotated inside that range all day yesterday. It looks like a UFO on its side. It's a normal trading day. It's neutral. There's no real directional activity that we can glean from a normal trading day. It's just a two-sided trade all day long. Buyers and sellers meeting readily and happily in this area. And, you know, there's not a lot to glean from this. We have a weak high here. We know that the overnight high was above that. That's something we're going to be keeping an eye on. There's plenty of weak structure down below this market. We've got a repair area potential here. We've got an anomaly down here at 41.39 with some weak lows, gaps, weak lows. So there is structure down below if price goes in that direction. We also had a weak high here on Friday. We've repaired that. So I'm really just going to do what I did yesterday is what I'm thinking until we get some new information or there's some change from the PMI composite or new home sales or Richmond Fed. Something changes. Lori Logan says something. We're just going to be watching. Yesterday, I was really patient. I sat and I waited for an opportunity near one of the extremes of the initial balance. We got our opportunity here in K period. It was 1:30 to 2 o'clock before I took a trade yesterday. I took the short up here because it was cheap and it paid me. And I was, that was the one thing I did yesterday and I was glad to have it. Opportunities were a little bit thin yesterday. So again, I'm probably going to be looking a lot at the same today here is letting the market establish an early range and focusing on those ranges, on those extremes before I do anything. Of course, that can change in a heartbeat with any of the news that's coming out today or a change in a market state. Again, I mentioned, that investors are probably getting a little bit aggravated. And I think it's showing in price action this morning to the downside. Markets don't like uncertainty. All right, here's crude. We're just about to open and above the weekly kickoff high. What are these weekly kickoff highs? These are levels that I believe longer time frame traders, the big money traders, are going to look to adjust inventory or be forced to adjust inventory. It is and open above this, it might be indicative of a change in the market state here. So one good thing for crude traders is rollover has pretty much ended, so we don't have to worry about that anymore. We added 11,000 in open interest yesterday. That's still a little bit blurry with the end of rollover. Excuse me. So weekly kickoff high 7290 in play, potential for change increases at these levels. It looks like we're going to be opening above that. That tells me that may be a good sign for continuation to the upside. Not that I want more expensive crude oil, but it may offer opportunity for us. Here's the 30-minute chart. So rejection. Last week's weekly kickoff high was 72.90. It remained there because where there was no real acceptance above it. 1, 2, third time, we're going to open above it. It may offer an opportunity for support if we hold above it. If we don't and we can't accept above it, I would look for a move in the opposite direction. But the thing about the weekly kickoff levels is it allows you the opportunity to limit risk relatively well. We look for some bigger opportunities off of these weekly kickoff levels. So if you do get a good one on, you may want to let that one run a little bit. They tend to be maybe some of the bigger trades that I take, and I come up with these numbers. I calculate these numbers. So I kind of have to take them. I'm not set up to take this one here, but we'll see what happens as the day goes on. We may get opportunity again. Yeah, this is a good risk limiter here. Here's the TPO chart. So initial balance low, excess low, weak high. We have excess above. We've got all kinds of information down below. A weak low here. It really just depends on if we're going to accept the overnight inventory being long. If we can't close the gap, if we can't get below and hold below 72.90, then I'm looking for this market to grow some legs to the upside. If not, gap close, a value area special situation play would be something I would be considering in crude oil today if we can't hold that. Rooster, they do not consider options expectancy. Their technical market profile, a little bit of, I used to joke and say, chicken bones and tea leaves. But they're mostly just technical analysis, measured moves, and market profile information. Good question. All right, now to the NASDAQ. Again, we're, day 3 in range here. We're waiting for information. Uncertainty is the word of the week here. We did see open interest increase in the NASDAQ here. An additional 3,500 contracts came in pretty much to the long side, right? It was an up day yesterday. But again, third day in balance. Anything can happen. We're waiting for new information. Sorry about that, Rooster. Stop using the chicken bones. Yes, I'll have to find something else to use there. You are funny, Rooster. Funny, Rooster. All right. So here's the 30-minute. So yesterday, adding open interest, really kind of holding in a P shape, which would indicate short covering, but we did add open interest. Overnight inventory is short. We may actually even open up with a gap. Probably. I mean, I'd say right now it's 50-50. We're right at the gap level. So overnight inventory is short. This market is still putting in higher highs and higher lows. I put this trend line here. Let's see if we can get it into its right spot here. So higher highs, higher lows, higher highs, higher lows, value continuing to move up. Well, how good of a job is it doing in this direction? It's obviously seen some momentum get sucked out of it by waiting for all of this. But the NASDAQ has been the strongest of the three amigos. So a pullback, wouldn't be out of the ordinary. But, I'm looking at this auction process, which was, I think it got up to about a B- and at its best as a C- right now, because really we're range bound. I'm not looking for a good continuation until something changes. Here's the TPO chart. This is going to show, again, a normal trading day. The first hour of the day put in the extremes of the entire session. So it's a very normal day, neutral, very neutral the normal day is. And again, we may open with a gap, we may not. We've got overnight inventory that is short. We've got a naked point of controls down below, potential for repair below that. And if we just continue to push to the upside, and don't forget, Anissa, in the NASDAQ, we've got a recent high in the extended trading hour session as well. So we're really just looking at short time frame levels to look for opportunities until we get some new information, either from the economic numbers today or from Lori Logan or from the debt ceiling talks. We need to get something done there. Here's gold, which continues to one time frame lower. Well, not really, but it's really just kind of holding against last week's low, right? We didn't look at it yesterday. We're looking at it today. Open interest continues lower for 5 straight days. We lost 6,000 in open interest. So the momentum into the downside, which I'm not sure was actually really all that great, seems to be continuing to wane. Last week's low is going to be pivotal. If we accept below it, we've got weekly kickoff low considerably below that, which is 1927. The last week's low and this 100 session moving average are looking kind of interesting for an execution here. Just the convergence of last week's low and the 100 session moving average is catching my eye. That means it's catching others' eyes. There might be an interesting opportunity there. Might be tricky because we know a lot of folks are looking at it. Here's the 30-minute chart. So, losing 6,000 in open interest on an inside day, value inside, range inside, overnight inventory short. We obviously opened with a gap. So we're going to work gap rules here, which means if we can't close the gap relatively early, we look for opportunities in the direction of the gap, which puts us up against last week's low, which we're kind of considering as an area of potential support. Probably not helping that much with good levels here, but this is the context of the market. The market is in limbo. It's just the way it feels to me. It feels like we're just all being held at bay till we get some new information. Repair possible. Last week's low, interesting. Yesterday, normal variation. Neither extreme was the IB high or low. Normal variation, just a neutral day. Excess low, weaker high, excess, all over the place. Not a lot of good context here, except for last week's low. And perhaps above this naked point of control here. That could bring, obviously, some potential repair of weak structure. And that day is a weak structured day. Let's take a quick look here at the euro. Same situation as the gold, except last week's low is the weekly kickoff low. We put that in 2 weeks ago. I put that weekly kickoff low in 2 weeks ago. It has been supportive as of last week. Is it supportive today? It's our third time down to it. Third time going to be a charm? Are we finally gonna blast through it? We didn't bring any open interest in yesterday. We lost 400. Volume was low. Volume's low all over the place because we're waiting for information. This weekly kickoff low, last week's low is in play. Very interesting level. I think this market was the one that kind of piqued my interest the most today because of, here's last week's weekly kickoff low. It was targeted support, rallied yesterday, We just kind of maintained, as all these markets seem to be doing. Now we get another look at it. This offers us the opportunity to limit risk. If we get it right, this could be a big opportunity in either direction. So far, it's remaining supportive. Buyers are still present here. We had a question yesterday in group coaching. What is demand? Well, demand is this level here. The market has had trouble getting below it. Buyers are present here. As long as they remain present, this can be supportive. If we break them, if the buyers finish what they're doing here, and we can get aggressive to the downside, we can turn the table on them and maybe see a bigger move to the downside. But, right now, it's support, and it lets you limit risk. You don't have to pay a lot to find out if you're wrong, or if you could be wrong, or if you might be wrong, whatever it is. If my wife was here, I would definitely be wrong. All right. So here's the gap. Here's that level. We traded to it a couple of times last week. At it now. Opportunity. Which way is up to us to try and figure out. Here's the 10-year. One time framing lower as rates continue to leak higher. Yesterday, we added 85,000 in open interest. That's the estimate. Open interest has been piling in to this move to the downside. This grade, this auction is getting a B plus because I don't want to give it an A. But this auction has been very healthy to the downside. It's one time framing, lower highs, lower lows. Volume has been, by and large, holding up. It was off yesterday, but with that open interest increase, it still says money's coming into the short side here. When is it going to end? Where does it stop? Well, we're getting pretty close to weekly kickoff low, 113 even. Our low right now is 113.04. That's 4 full ticks above weekly kickoff low. Might be an interesting opportunity for us. At some point, some of these shorts are gonna look to take some profits. At some point, when is the question? Here it is. Last week's low. We opened below it. We've opened with a gap. If we close the gap and we can't accept below last week's low, that's interesting because this is relatively close to the weekly kickoff low. I mean, this is in the zone that is the weekly kickoff level. There's once in a while I'll hit an exact higher low on weekly kickoff higher low, but it's more of a zone than anything. There's nothing finite in futures. So this is going to be interesting. What's really going to be interesting is if we come up with some sort of resolution for our debt ceiling, which we're all, of course, hoping for. And we've opened with a gap. It looks like we're working to close the gap. But, overall, we've had pretty good excess on the highs, weak lows most of the way down. This has been a very healthy auction. However, it does have some structure issues above the market. We've got naked points of control. We've got a gap here. Okay, so there is the hint of, here's another gap here. There is the hint of weaker structure above. Just be careful. We're getting pretty close to that important inflection level down here. Here's the natural gas. Natural gas is in rollover. Open interest is tricky, losing 12,000 overall, but losing 16,000 in the June contract. So you could kind of look at that as an increase in open interest on a down day. We're still kind of stuck here in kind of an area of previous balance. The 30-minute chart tells a kind of a good story. It seems that the market has kind of, been comfortable in here, at least overnight. There was no real overnight inventory. Market looks like it's, probing lower to see if there's any business down there. If that auction process fails, there's a big gap above. That's a kind of it's not really a weekend gap, but the gap from Friday to Monday is pretty substantial. We kind of run out of visuals kind of down below here. So I'm so glad I don't trade this market. It's a little bit crazy. A meteorologist, yeah, to trade natural gas. It is vicious. It is I like what Anne Marie said about it. She called it the Widowmaker. And it can be, right? Here's the TPO chart. We've got, plenty of excess. A weak low here. Okay, that's kind of unfinished downside auction. Excess down here, of course. A degree of excess on the high on Friday or Thursday. Friday excess. This is a tricky one, ladies and gentlemen. This is a tricky one. So, all right. We're going to get down to business here. We're going to get to make Hogue money in just a couple of minutes. Let's take our deep breath. Humble, grateful, creative, and centered in your trading. You find yourself getting upset, getting emotional, getting your switch flipped. Take a break. Let it go. Come back later on. These markets, though the opportunities seem a little bit scarce these days, are opportunity-making machines. There is always something coming down the pipe. Have a great trading day. If I don't see you, make Hogue money. Probably see you for a reflection at the end of the day. We'll see. Have a great day.